On the issue of inflation, I'm a hawk in the parlance of the aviary of the Federal Open Market Committee. And there are doves that are easier on monetary policy. I happen to be probably the most hard over of all my colleagues in terms of the dangers of printing money. But I would like to think that those are out-of-date terms. I'd rather think of myself as a wise owl if I could get away with it. And I have to be straightforward on this. I am the most wary of inflation. I hear a lot of businesses today talking about the fact that they have become extremely lean, extremely cost managed. They have driven their productivity to all-time highs, and I think they're right. I think American businesses are in better shape, are more competitive, are meaner and leaner and tougher than any businesses anywhere in the world. Until they see the eyes of the demand in the marketplace, the whites of the eyes of final demand. And very, very importantly, until they see some clarity about what tax policy is going to be, what the cost of social overhead is going to be in terms of health care and other regulatory and other rules that are written by the United States Congress, I don't think they're going to be hiring people in great volumes. Now, we did see some data recently that indicates that all the liquidity we at the Federal Reserve have provided, and let me define that for you. On the balance sheets of the 12 Federal Reserve banks, we have over $1 trillion. In fact, over $1.5 trillion in excess bank reserves, which we pay our bankers to deposit with us only 25 basis points. That's 25 1/100ths of 1%. No banker I know, even John, is satisfied earning 25 basis points. They'd rather be lending money to people and paying them a decent rate of interest. Those are excess bank reserves. On the balance sheets of corporations, just in the S&P 500, the big ones alone, there's over $1.5 trillion in excess working capital. And I have one advisor who I consider to be the best forecaster in my survey of businessmen. It happens to be a dry cleaner I talked to. He has 33 employees. I asked John if there were dry cleaners in this room. He said the bald-headed guy sitting over there. White shirt with a little polo coming on, Joe Clifford. That's how he described Joe. With all due respect. But I would venture that whether it's Reed's cleaners or I won't mention the other fellow that I talked to, their reaction is pretty much the same. He told me the other day that he has access to all the bankers he wants. The cost of money is dirt cheap. But he's not going to expand until he understands what his tax bill is going to be, what the cost of social insurance will be for his employees. And until he sees a retrenchment in the cost of the plastic bags and those little things you put in the cuffs and the hangers are going to be and so on. And I think this is an issue that's facing all of corporate America. So here's the point. The central bank of the United States, which I represent, has re-liquefied the economy. During the crisis, there was no liquidity. We restored liquidity. You can argue that we did too much. I happen to argue that at the table at the last round of what's called QE2 by our outsiders. We call them large-scale asset purchases. I was against it. I thought that we had passed the danger point. But whether you think there's too much, like I do, or just the right amount, the point is there's sufficient liquidity in the system. That's not the issue. People have access to capital if they're creditworthy. The bankers want to lend money to creditworthy customers. The question is the demand, and who will be confident enough to grow. And when you grow and invest, you hire people and put our American people back to work. Now, we're very blessed here in this part of the country. I'm always hesitant to give these numbers because certain political candidates like to run them. I won't mention their names. But the Wall Street Journal had a lead editorial a couple of Fridays ago after we had visited with their editorial board, pointing out that a disproportionate amount of the jobs in America have been created right here in Texas. The number they used, which was through April, was, Jared Long, correct me if I get this wrong, 37% to 45% of all the jobs created since the recession ended. I will tell you that if you take a chart of all the Federal Reserve districts going back to 1990, I'm very blessed, we are very blessed as Texas, because ours goes like this. We've been growing our output here in our Federal Reserve District, again 96% of which is Texas, by 3.6% a year. The rest of the country's growing by 2.5% a year. The reason people come to Round Rock, or to Austin, or to Dallas, or to any other place in Texas is because we offer a better opportunity. And this illustrates a point to me, John, and that's the following. We have the same monetary policy here as we have in the rest of the United States. We pay the same rates of interest. We have the same mortgage rates. Money is priced exactly the same. Why do people come here from Michigan, from Indiana, in spades from California, and from New York? Same monetary policy, same interest rate structure. Answer, fiscal policy. We have an attitude that is pro-business. We have a legislature that meets 140 days every 2 years. Personally, I wish it was 2 days every 140 years, but and we're a can-do place. We have wide open space. We want to create jobs here. It seems to me that the Congress of the United States has to adopt a similar attitude. And what this all comes down to is incentives or getting rid of disincentives for bald-headed guys in white shirts with mustaches who I won't identify in this audience like this man sitting out here, or big corporations like Emerson and others to operate. So I think that's where we are right now. I don't see a whole lot of price pressure in this economy as we measure at the Dallas Fed. We do things everything we do is different. We have what we call trim mean calculation. We are seeing some of these temporary price pressures alleviate themselves, but we're seeing inflation as measured as we measure it through a trim mean, that is trimming out the excess movements every month of 178 items we've been tracking since 1977 that affect real people, running about 2%. That's the underlying trend. We'll watch that very carefully. We are worried about how people are going to price this back-to-school season late summer through the big box stores and others. We'll see that tug of war and how it ends up. But I think we've got monetary policy just about right. And then as we see the economy pick up, if and when we see the economy pick up, then we're going to have to consider how we're going to take out that stimulus that we have provided from the economy. But I'm here to tell you it will not pick up until we get clarity from the fiscal authorities of the United States. And again, you elect, I'm not elected by the American people. Your congressmen and congresswomen and senators are. And that's where we have to get the right answer. Otherwise, the Emersons of the world may move hard from Austin to Round Rock, and they may move and create some more people here. They hopefully, I'm leaning on you here, will move from other states to come to my state and our state. But otherwise, they're going to go elsewhere in the world. And let me conclude with this worrisome thought. The good thing about winning the Cold War and having the bamboo curtain come down and making peace with people used to be frightened of or used to threaten to fight back with is that any businesswoman and any businessman has a right, in fact an obligation, to earn a return on investment. They don't have to invest here. That's good news. It's also a difficult issue for us. And I would suggest to those that are trying to balance the budget and figure out what the debt ceiling is, fund our horrifically underfunded liabilities of Medicare and Social Security and Medicaid, that they have to think of that also. We have to compete against others for capital, and other countries that want to take our capital and want to create jobs for their own people. We have to create them for our own people right here. Let me just conclude by saying that I'm not a pessimist. After all, I am a Texan. I like to quote my favorite historian, which is T.R. Fehrenbach. He pointed out that the reason we are exceptional here is because, as he put it, the Texas ethic and Texas society rewarded enterprise. Work is the real virtue in Texas. We are a people, he said, for whom, quote, the cult of courage is obvious. And he distills our ethic here into one sentence. Here he said, men and women who exist get overrun by men and women who act. It's time for the Congress to act. Thank you.